Good morning, everybody, or good afternoon, I guess. Welcome to today's episode of Signal with Snorlax, guys. The weekly show where we try to predict the future. Well, not exactly, but you guys should know the deal at this point. We're trying to see if we can derive some signal from a very noisy market, especially right now. Today's video is talking about bank stocks specifically and the future of kind of what that means for Ethereum and DeFi. And last weekend, I put out a tweet based on the look of US financials, aka banks. There's a non-zero chance that over the next 12 to 18 months, we're about to witness the greatest meltup in the history of risk assets. Now, I think that sets the stage quite aggressively for a very interesting video. How can we be about to see a melt up when we've already seen 2-3 consecutive years of not up only price action, but consistently trending upside from the market since the 2022 lows. So for all the talk that there was in April, including from myself, I'll take some accountability. I definitely was not expecting the market to bounce back and recover as quickly as it did. But look, it has. To me, the fact that you had all this doom and gloom, and here we are 3 or 4 months later talking about equities not just back to the highs, but ripping into price discovery is a pretty strong indication of the strength of this market. And I know, again, like everybody is so obsessed with this idea of cyclicality, but I think there are signs that we actually had not the ending of a cycle, or not that we're at the end of the market cycle, but that we're possibly we hit the reset button. We're about to start again in some of these risk assets, specifically crypto, that I'm going to touch on. I'm going to touch on. But yeah, I mean, look at equity charts. They're in parabola. The S&P, the NASDAQ. When will the U.S. stock market actually top? I think it's going to come down very much to what banks eventually do. And I do think that's going to have some pretty significant ramifications for Ethereum. It's going to have some huge ramifications for Coinbase, and probably for DeFi as a byproduct of that. But let's talk about ETH and DeFi, because obviously it's much of the same when we look at Ethereum and we look at stock market, or rather these indices. We saw indices rebound back to the highs. We're in the process of seeing ETH do the same thing right now. But I think when we look at some of these high time frame Ethereum charts, when we look at these high time frame DeFi charts, to me, they signal that a lot of similarities to a market, or at the very least equity markets coming out of 2008. I'm going to point to the NDX first as an example of this. So we're going to go back to stocks just for reference. When we're talking about AVE, for example, we had the huge speculative bubble. We had the pop. We had a bit of an echo bubble. And then obviously we had years and years of aggressive uptrend and appreciation. I kind of liken that NDX chart, that NASDAQ tech bubble popping and resulting 2008 echo bubble to what we're seeing in AVE. And I would say we've probably already completed that correction. The flip side of that, you can look at more DeFi charts. Maker, for example. I think Maker and Pendle specifically are really great comparisons. When we look at bubble 1, bubble 2, you see it with Pendle, I think, as well. How you kind of have had bubble 1, bubble 2. Now look at some of these big bank stocks, for example, coming out of 2008. And I think there are quite a lot of similarities between these charts, which again, I think sets the stage, right? Bubble 1, bubble 2. I think a lot of DeFi charts are potentially basically in here getting ready to really move aggressively higher. So again, there's all of this obsession about cyclical endings. Well, I'm here to present the kind of the antithesis of that, which is that we kind of already have had a cyclical reset for DeFi. And there's actually quite a lot of evidence in previous, or rather like the history of these tech charts, of these big bank charts, pointing towards the fact that DeFi has already undergone its cyclical reset in the first half of this year. So I think that needs to be said kind of as a preface to before we get into financials, which I want to do now, because I think it's probably the single most important thing or factor for me. If you're viewing a market that wants to potentially not just move higher, but also melt up, you're going to need lots and lots of liquidity. You're going to need banks to be strong. And in April, it's really funny because there was all this talk about how, okay, well, it's time for Wall Street to step aside and Main Street to step in and really take the reins over, maybe practice a bit of fiscal austerity. I know that's a very, it's a funny concept, especially now looking back, because the exact opposite has happened. Things that were supposed to be very bearish catalysts for the market have now kind of turned around, and we're almost getting this like backdoor QE which has been hugely positive for banks. It's been hugely positive for market liquidity, and as a byproduct of that, we're seeing it benefit obviously indices, risk assets, in varying amounts of time. But financials are going to be most sensitive to that increase in market liquidity, which is why they're already in price discovery. This doesn't look like a chart that's top to me. And actually, when I look at this structure specifically on JP Morgan, I'm reminded so much of parabolic price structure. We have a lot of really great examples of what parabolas can look like over time. And I'll tell you guys what, when I look at these financial charts, it looks to me like we have completed this bit of price history, and we're probably coming out of this sort of dip that Bitcoin put in, which to me signals, hey, maybe we're about to see a pretty aggressive melt up, not just in financials, but also across all markets here. And I know that's kind of spitting in the face of the 4-year cycle theory, but I am going to talk a little bit about that more towards the end of the video, and why, I'm not really looking for a traditional 4-year cycle. Famous last words, right? But it's kind of been a theory I've been working on since, I would say, mid to early last year even. So I've been kind of consistently skeptical of the 4-year cycle holding true. I feel like what we've seen thus far is kind of just a continuation of that. So I think you have these bank stocks looking like they want to potentially go parabolic here over the next year to year and a half. It's going to probably trade fairly correlated with equity markets. And then I think at the same time, I don't really have any thoughts on rates. I won't give any opinions on that necessarily. It's just not really where my edge is at. But it does seem like we are headed towards more accommodative macro policy through rate cuts. You can definitely argue whether or not the market needs to have rate cuts, or the economy, that is. And you can also argue whether or not the long end yields will actually go down as a result of rate cuts. But I do think you're likely to see the Federal Reserve cut rates at some point, whether that happens while Powell is in office or after he departs. And that will serve as a further tailwind, I think, for banks. And I would also add in HYG, which is not a chart that I'm consistently trading, but when we talk about junk bonds, the health of banks, I mean, you can highlight the MOVE index as well, which has been coming down substantially since April. But I think the fact that junk bonds, to me, look ready to trade higher as well. And eventually, I believe we'll take this liquidity out up here, levels that we haven't seen from junk bonds since 2016, 2017, basically the first Trump administration. I think is more confluence that we're about to see banks be incredibly strong here over the next year to year and a half. If financials are bullish, it's really, really hard for me to think of a bearish outcome for the market on a multi-month time horizon, or rather like a multi-year time horizon, because again, they're directly correlated with liquidity, and the market has consistently shown us if liquidity is rising, the market will likely continue to rise as well. Which brings me to ETH and DeFi. Obviously, you guys are going to be here more so for crypto alpha than bank stocks. but I feel like there's almost kind of like this order of operations that's occurring, uh, where the money is, or like how and when the money is flowing. And I kind of think that order of operations is going something like bank stocks move first, then we've seen Coinbase move, and there was a bit of a lag between that huge candle that Coinbase put in a few weeks ago and this big price appreciation that we're seeing out of ETH, for example. But I think we're finally seeing that capital flow further and further down the risk curve as the market is seeing, okay, maybe things aren't actually as bad as as we thought they were in April. They're actually quite bullish. And then after ETH, we're seeing DeFi begin to benefit as well. So obviously, I pointed out the similarities that these DeFi charts had to post 2008. I think these DeFi coins are beginning cycles, not ending them, which probably means ETH is getting ready to do the same, and that the lows that we set in April are very likely to be high time frame macro lows that, I mean, it would take something pretty extreme for us to visit ever again. So I think with that said, you have really the perfect context for a longer cycle. Uh, and again, I haven't really adhered to the 4-year cycle thesis for this cycle for a while for a number of reasons. But I think the biggest one that you have to highlight is that this is an adoption cycle for crypto. For Bitcoin as a store of value asset, an asset that nation states will eventually own. And for ETH, stablecoin growth, onboarding banks, that is not something I don't think these fundamental catalysts can really occur within the confines as rigid as a 4-year cycle. So I think because of that, we're likely to see this cycle extend well beyond 4 years. Where altcoins will undergo traditional boom and bust cycles, but Bitcoin and ETH are ultimately in much larger adoption phases. I believe that we're seeing that, and we're likely to see these DeFi assets as they get adopted, per se, trade a lot like big bank stocks coming out of 2008 and into the present. So I think this context is really pointing towards more growth in DeFi, more growth for ETH. There's a lot of uncertainty in the market after April, but I'm here to tell you, I think there's an equally valid case that a lot of these risk assets are just beginning market cycles rather than ending them. And I think financials are really communicating this. As long as financials are bullish, I'm going to be very bullish on a multi-year time horizon. But they're screaming for higher, and I think inevitably that's going to, in probably the same way that we've seen over the last few months, trickle into ETH and trickle into DeFi. At the same time, you have all these tailwinds underway for ETH right now. Obviously, Circle Bank is kind of like a proxy of both ETH and Coinbase, or rather like ETH and big banks. So stablecoin growth is only set to continue. Obviously, we can look at the USDC market cap growth, which has basically been up only for the last few months, the last few weeks, pretty much the entirety of 2025. It's been up only. So you're only likely to see that continue. If financials continue to melt up, then based on that order of operations we kind of just established, it's only a matter of time before Coinbase moves, before ETH moves, and then before DeFi moves in a self-reflexive or a self-fulfilling reflexive cycle that will benefit price appreciation. So that's kind of how I'm viewing the market right now, guys. I mean, that's why I put the tweet out that I did. It really does all come down to bank stocks, which are benefiting from less regulation, some political favorability. Obviously, the big beautiful bill is going to continue to stimulate the economy and provide liquidity to the market, which will benefit banks, which will benefit ETH, which will benefit Coinbase, which will benefit DeFi. So we have this order of operations, like I said, and it's only likely that that continues as banks continue to melt higher over the next year to year and a half. If there were to be a change in that situation, then maybe we're having a different conversation. But I'll tell you guys what, there are not many charts I think that are more bullish than some of these big bank charts. And yeah, that will have a residual effect and bleed over into crypto, specifically ETH. So that's what I'm seeing in the markets, guys. I hope that you enjoyed today's episode of Signal with Snorlax. Hopefully we provided you with some signal. But thanks again, as always, guys, and we'll see you next time.